Hello, everybody. I'm just letting people join here. Let's see. All right, I've got some eyeballs. Please give this video a thumbs up if you can hear me. Hopefully, we're good there. Or make a comment and let me know that you can see me and hear me. Let's see. All right, got a few people on here. I'm going to pull up YouTube just in case here too. Let's see me. All right, thanks, Heather. And Heather, thank you, our very first member in the channel. Really appreciate the support. That was awesome to see some proof of concept. So thank you, Heather, for that. Awesome. We have people that can hear. That's great. Um, all right. So today's session is on how to avoid trouble with CRA. So lots going on here with tax season coming up, deadlines, and I want to just clarify a ton of the things that you'll be thinking about over or need to think about over the next couple months, and what to do if you actually get a CRA audit or even just a letter that asks for some information. Give you some empowerment to not feel panicked about that, and what you can do to keep that auditor happy. I see we already have a question from Paul about that, so I'll definitely dig into how to keep auditors happy when they're sitting across from you. So that's great. I'm going to share my presentation here, and please ask questions throughout. For those who don't know, I'm Joe Collins. I am one of the owners here at Avalon Accounting, where our mission is to help small business owners across Canada build thriving businesses. And that's our key. But obviously, we get a lot of other sort of tangential information that we can make helpful to all Canadians. If you're a taxpayer in Canada, which most of us are, hopefully you can glean something from this channel and what we're putting out there. And we love to answer your questions too. So always pose them. Sometimes we don't have the answer, but often we do. And it always makes for a good video when it's a real question that we get from a real person. So really appreciate that. Again, Joe Collins here from Avalon Accounting for people just joining. This session is going to be the importance of staying on side with a CRA. You definitely do not want to get on the wrong side of CRA, but it's not too hard to stay on that good side if you're planning ahead and things. So I'll tell you all the tips and tricks on how to do that. And we'll obviously have a question and answer session at the end. So as questions pop up in your head, please post them to the chat. I will cover as many as I can, and I'll make my presentation quick because I think this one is going to garner a few questions. And if I don't answer right away, I'll just go back through the questions at the end and get to as many as I can. And we always prioritize members' questions. So we do have a membership. It's pretty affordable, I think, and help support the channel and keep us going. And there should be a join button somewhere, or actually I can put up a QR code here in case you're ever wanting to join the channel. Oops, not that one. This is subscribe. And it might be our join link, actually. You can support the channel, just pay a small monthly fee, and we prioritize any of your questions on our lives. And if you comment on our videos and that, and you can make sure that we have this channel going on for a long time. Really cool. Next up, if you want to get notified of future events, you can sign up for event updates. We're doing these every 2 weeks mostly. The odd week I'm not here on a Friday, but it should be every second Friday. But if you get the email, if you sign up for the emails, we'll tell you exactly when those are and what the what the topic is, so you can put it in your calendar, because we will skip the odd week, but really excited for some of the ones that are coming up this year. I'm really excited to see. um, our marketing team's been really helping with researching some of the topics that we get to cover and making them most relevant to you guys. So lots more to come with the lives as well. Really exciting on that side. So Q&A throughout and at the end. So please feel free to ask questions throughout as well. If it's relevant to what I'm talking about at the second, I will cover it right then. But if it's something at the end, I'll make sure I go through the Q&A as well. All right. So that's a bit of housekeeping. I'm going to share my screen here. And hopefully you can see that. There, you get to see my face and my slideshow. Nice. All right. So yeah, again, avoiding trouble with the CRA. I'll go through all of that here. So let's see here. See if I can actually do both of these things at the same time. All right. So, content highlights for today. So, number one, we're going to understand your tax obligations, whether you're a business owner or just a personal tax filer. Obviously, super simple if you're just a personal tax filer, but understanding your tax obligations, what's coming up, some common tax compliance issues. So, how commonly people get on the wrong side of CRA. And then we'll cover record keeping and documentation. What do you have to keep and when? Some tax planning and strategies, and audit preparedness. So that's the general overview. We'll get into a little bit more detail on those. And again, I'm going to almost race through this because I know there's going to be some questions in the Q&A and people want relevant information for themselves. So I will get through this as quickly as I can without sort of brushing over it too much. All right. So starting just with basics here of small business taxation, um, talk about sort of the main categories of taxation, and it usually follows with your business number, so that 9-digit number that starts in a 7 or an 8, and then R something 0001. So the R something is your program account. So generally you would have an RC account if you're a corporation. That's your income tax. And if you just run a sole proprietorship, it's just piggybacking on your personal tax return. It's a separate form to fill out, but it's just a T1 personal tax return is what you're looking at. But for a corporation, that's your RC account, RC0001. GST or HST is an RT account. So it's a program account that requires a separate return that should be filed according to your business's filing frequency. And that could be monthly, quarterly, annually. And then there's payroll. So that would be an RP account. So any CPP that you're collecting on behalf of your employees, and withholding tax and EI and all that stuff that needs to be remitted, that's all covered under your RP account. And the filing there is T4s you would do every year. And then I've sort of piggybacked informational. It's an RZ account, and that's your dividend slip filing. So T5s will be filed under that. So it's generally 4 program codes that people will be registered for if they have employees and they're a corporation. But if you're just a personal, like a sole proprietorship, you might just have an RT account. So you might be your business number with an RT account, and that's your GST and HST filing that needs to be filed there. That is CRA because we're covering CRA today, but this isn't everything you need to file with every government in Canada. So don't forget you have business licenses that should be paid for every year. We just paid our City of Victoria one here, and we hang it on the wall like we're supposed to, and it's about $100 a year. So that's municipal. Then you'd have provincial. So you might have provincial sales tax where you are. I know in BC here we do, and we have to register for that. There's also employer health tax. So in BC here, if you have payroll over $500,000, you have to file an EHT return. So not covering those today, but just give you a sample of some of the things that You may still have to file. This isn't an exhaustive list. We're talking about just the CRA filings today. So that is, in a nutshell, all the things you need to file with CRA, and on to the returns, the actual returns that you file. So everyone needs to file a personal tax return, T2s for incorporated businesses, and that's where you generally get accountants' help. And the reason why, and it's a confession time here, is that we've tried to put a course together for people to file their own T2s, and it turns into an accounting course because the difference between a sole proprietorship and a corporation in Canada in tax filing situations is that you have to file your tax return on an accrual basis. So you actually have to do the accounting on an accrual basis. And so getting to that point when we tried to do the course just became we're teaching accounting and how to do accounting and all of these things before we can even get to the tax return, which has its own complexities. And I think we tried 6 ways from Sunday. I know I just kept bumping into, if this, do that, if this, do that, and became kind of a situation where um, a little bit of information is almost a dangerous thing. And I don't say that to be like, we're as open as we can possibly be about what needs to be filed or what work you can do yourself and learn about. And we're very open with all of that. T2s, I thought maybe we could teach people how to do it, except for edge cases. If you have a nil return, you could probably do that on your own. But otherwise, I I really think business owners should hire an accountant to do their incorporated tax return, their T2. Sorry, there I said it. Then you've got T4s. So that's any businesses with employees. You need to report your T4s every year, and that's a filing with the government. So there's a T4, general slip, and then all the slips to be filed for each one of your employees. And then you need to distribute those T4s to your employees as well. So a couple, like two sides of that equation. Really important to reconcile between the two different accounts. I'll get a little bit into those with probably people's questions, but you're matching up your remittances you've made throughout the year with payroll, and then filing your T4s that should match up exactly. I think it's less than $2. If it's less than $2 difference, you get a report back, and you've got to explain your differences, and that can be a pretty intense process and stressful. And then T5. So if you've issued dividends to any of your shareholders throughout the year, you file what's called a T5. Pretty simple filing, but again, not something that most business owners are going to do on their own. It is just a big hurdle to get the knowledge to actually file that properly, but not impossible. Absolutely, go to there's lots of online courses, I think, at different universities. Athabasca College, you can do an accounting undergrad and teach you all that stuff. Then GST, HST. So that's common return to file. And again, uh, different frequencies on that, but at least once a year, you're going to file your GST, HST, which is reporting your total sales from everywhere. So all worldwide sales, GST you've collected, and GST that you've paid out on purchases. So not a super complicated filing, but which we'll get into is it's the build up to all this stuff that really makes the difference. So I'll cover that as well. Deadlines. Obviously, super important to stay on side with the CRA is to file on time. Really important to um, put these on your calendar, which we'll get into some tactics here for not missing these. But T1 due April 30th if you're not self-employed. If you are self-employed, that due date is June 15th. So you don't have to file till June 15th. I think it's actually June 17th this year. I'm sure Paul or somebody can correct me if I'm wrong on that. It's the month if the 15th falls on a weekend, it's the following Monday, the business day that it's due on. But we'll get there's a trick to this, so hang on. I'll cover that um, uh, in just a second. But it's there's something there. I'll just dig into that in a second. T2s is 6 months after your year end date. So in Canada, you can choose whatever corporate year end date that you want. I actually saw February 15th once, which was really bad. Do it at the end of the month. Do it on the end of a month, please. It's like June 6th or something. Is really super annoying for everybody involved. You pick a month end date and you can do that throughout the year, whichever date. Try to avoid December 31st if you can. If you are just incorporating your business, you get to choose what year end you would like. If you avoid December 31st, you'll thank yourself and your accountant will thank you too, because who likes shopping on a at Costco on a Saturday is kind of how it is. It's the busiest time for accountants, and the service you get is probably going to be a little more rushed, just the nature of the business. Not that we're going to turn you away, and Costco wouldn't either, but definitely can affect the experience that you have. But generally, 6 months after year end date is your filing deadline for a T2. T4s due on February 29th this year. Need to get those filed. It's the last day of February is the official date. And this year we got a 29 leap year. T5s, same thing. So filing at the same time there. GST, HST varies. So if you're an annual filer, it's March 31st, 3 months after your year end date. And if you're incorporated, if you're not incorporated, it follows with your personal tax return. They can be filed at the same time. So your due date's June 17th this year. But again, caveats. I'll give you in a second. If you're a quarterly filer, it's the month after your reporting period. So if it's January to March is your reporting period, your return would be due April 30th. And likewise with the next one, which would be April through June, it would be due July 31st. So the month after. And same with monthly. So monthly, it's the same thing. So if it's January GST, HST return, you would file it by the end of February and that as well. Now, the caveat here that I mentioned before is that these aren't payment due dates. These are filing due dates. And really, I think if I'm going to jump ahead a little bit, is this is maybe a common pitfall that people have, is they don't distinguish between a filing due date and a payment due date, and that can land you in some hot water. Generally, I'll say this: if you miss a payment deadline, not the biggest deal because they're going to charge you some interest likely. So not the end of the world, not ideal. You don't want to be paying the government of Canada any more money than your taxes, but not the end of the world to pay a little bit late if you need to. But filing is a whole other matter. So that's where you get into penalties and things. And if you file your return late, so that June 15th here is a super important deadline if you're a sole proprietor. 6 months after year end date, super important after for your T2. But the payment deadlines can be quite different. So in the first example, where you filed June 17th this year as a sole proprietor or self-employed person, your T1, your payment is still due April 30th. So you should try not to miss that date. Do you know what you owe by then? Probably not, which is kind of ridiculous, but it's just the way it works. So you should pay something by April 30th, and try to do your best if you haven't prepared your tax return yet to pay approximately that amount, and they'll refund you anything that you've overpaid. Simple. T2s, your payment due date is generally 3 months after your year end. If you're a small business corporation, which most of our audience, I think, is, they make, profit less than $500,000 in the previous year, and they're a small business corporation and they're owned by a Canadian. That's most of our clients. So that would be 3 months after your year end date is when your payment due date is. But if you don't fall into that category, it's 2 months after your year end date. So super important to distinguish there. But I think most of our audience would be the 3 months after year end. T4s and T5s, I mean, payments happen when they happen. T5s, there's no real payment associated with it. T4s, it's your remittances throughout the year. So you've got to keep those up to date. Payroll it's relentless. if you have to pay remittances, keep up with them. And then GST, they generally follow, except for the T1 alignment with self-employed individuals, payment aligns with their filing due date. So just to clarify, GST, HST, if you're a sole proprietor and your filing due date is June 17th, your payment due date is still April 30th. I think I said enough on that. Let me know if you have any questions. It's a lot. But how to avoid issues with the CRA. And this is so important. And you can't really stress this enough, especially as an accountant, the stuff that we see. It just starts with good record keeping. Bookkeepers are worth their weight in gold. And if you're not good at that stuff, please hire a bookkeeper. Just do yourself a favor and take that off your list. Charge a bit more in your business if you have to, but super important to keep good records, keep them up to date, uh, and um, and do it religiously, or hire that out to a professional that can do it well. Um, it's there's a lot that goes into it, a lot of organization, a lot of executive functioning required. It's a special breed of people that do bookkeeping well, and we know that from our team. They're just super amazing people at what they do. Um, but not everyone's built like that, and that's just the way we are as people. We have other strengths, but it's really crucial to keep out of CRA's bad books, is to keep your records up to date so you can actually file these things accurately. And I don't know how else to say it really, other than if you take one thing away from today's session, just keep good records. Um, Super, super important. I'm gonna make sure I didn't miss anything here. Um, oh, we do have, so there'd be some links down below. If you are prepping for your year end and you do your own bookkeeping and you want it, you have your own accountant. There is a really good video that Paul did that we linked below, which is, and there's a blog as well if you'd like to read on year-end preparation for corporations. So if you've done your own bookkeeping throughout the year, how to prepare your accountant for your accountant to do your books in just or your tax return in a really stellar way. So check that out down below. We've had just amazing feedback from the spreadsheet that Paul's put together, and he walks you through it in the video as well. So super handy there. And there's a checklist as well on the blog. Some tips and tools for this. I mean, cloud bookkeeping, our spreadsheet. I mean, we offer a free bookkeeping template on our YouTube channel here, and then there's the corporate one, which is your accounting at year end as well. Super handy. I mean, this free. There's not, and we explain it all. No excuse not to use something like that. But if you're looking to level up a little bit and want more reporting, and you send invoices and do all of that, I mean, check out Xero, check out QuickBooks Online. Super handy tools to use to keep your records in check. But critical. If you're going to take on any of these pieces of software for yourself, do yourself a favor and spend the time to learn them properly, to get some training on them. Their marketing, it really annoys me sometimes because like QuickBooks especially does this, and Xero probably too, is they make it seem like it's just a simple thing that's going to solve all your problems, and you wave a wand and AI is going to do this stuff for you, and it's just not true, at least not yet. It takes a lot of input and a lot of process for yourself, and you have to keep up with it. So really important, if you're going to take on those things, really learn the software, or of course, I mean, hire somebody to help with that. But really crucial there. The other thing you can do, and I should have a T-shirt that says this, but keep your business bank account and credit card separate. I'm going to have to get that printed because it's a slogan for us now. If you do yourself one little favor, even if someone else is doing your bookkeeping or you're doing your bookkeeping, if you keep all your business transactions separate on a separate business in a separate bank account, I don't care if you're incorporated or not, same thing applies. Try to keep any personal transactions completely separate from your business ones. And you're either your bookkeeper or you, if you're doing your own bookkeeping, will thank you later. Your future, whoever, your future bookkeeper is going to thank you. And credit cards go the same thing. It doesn't have to be in your corporate name if you're a corporation, but keep the credit card separate. It can be the same points account, it could be the same everything, just has a different data set. It's a separate card with a separate number, and you can report on that. Big deal. But yeah, cloud bookkeeping or yeah, cloud software can really help with this stuff. Taking photos of your receipts and putting them in a Google Drive, so you're not searching for them later, which we'll get into with CRA audits in a second. Super important to like look into these types of software that can help you. Um, we've got a whole tool kit that you can look at as well on our website. All right, next up. Um, some of the issues that we see, um, common. One was that keeping like um, your filing deadlines and your payment deadlines, just keeping those sorted in your head. That's a big deal. But underreporting income can be one thing. Is if you miss a slip on your personal tax return is common. See it all the time. It doesn't get reported to CRA. You don't pick it up. You could miss a slip, and CRA will punish you for that. But even in your business, underreporting income can be an issue. So report all your income, go get those mortgages and things, and um, handy to have. And I don't like, you know, hide income. Lots of people do it. I'm sure there's like, thousands of people are around that do this thing that just don't report some of their income. Um, I mean, what's the worst that could happen? I guess you get audited and they find out. No one's going to jail or anything, but you can get into trouble with that. But also, I don't know. I would sleep better at night if I was reporting all my income. And if you ever want to sell your business, super important to have these records because your business is not going to be worth anything if you don't report all your income. So that's important. Missing deadlines and falling behind on bookkeeping. Like I mentioned, record keeping is the number one thing. If you get good record keeping, everything else becomes easy. But missing deadlines, so keeping track of those, getting those deadlines in your calendar so you don't miss them, really important. Just outline them all, get them in there, and you'll thank yourself. And then claiming improper deductions, there's always gray area, I think, in this thing. We do have some videos on how to evaluate whether it's a proper business deduction. Um, but you definitely don't want to claim things that are personal in nature and push the envelope too far because you will get caught up with likely. So those are kind of the bigger ones. But the number one by far is just not keeping good records, not filing in the first place. That's the issue that's going to get a lot of people down. One last one, I would say, in terms of improper deductions, it's just keeping your receipts for, especially for larger transactions. Some of the like, are they going to look at a coffee one? Maybe not. But there's risky areas of your deductions like travel, meals and entertainment. They can spot check these things, and it's good to keep really close records of that and match that up with your calendar on who you were going for a coffee with and or dinner or yeah, other things like that. You want to keep very good records. Yep. So we got the record keeping ones here, separate business personal transactions, schedule those tasks out. Super important to, get into a rhythm with your bookkeeping if you're doing it yourself, keeping those receipts and simplify with cloud technology. So whether you're using like a Dext Zero thing, like our bookkeeping course is on Dext and Zero and how to make sure all the transactions really tie in and you can have a receipt attached to that particular transaction like that, or using Google Drive, free option, take a photo of your receipt, throw it in a Google Drive folder, and it's going to be searchable. It's probably got like GPS tags on it, and your and date stamped and the whole bit. Like you're not going to lose something if you're doing it in Google. So that's a good way to do it. But keep it simple for yourself. So keeping those receipts in one place, and then scheduling those tasks. And it was a few years ago. Paul and I flew over to Vancouver. We did this presentation for BCBAs. They're like board certified behavioral analysts, and it's like this group of people. A lot of freelancers there, people working for themselves. And we told them about this, like how to keep your bookkeeping up to date. And one of the things that reward yourself, like if you do the hard work, either make it enjoyable during, pour yourself a glass of wine, eat some chocolate, I don't know, get a shiatsu massager for your neck, whatever it is that helps you do that thing. And we got a good laugh because that's kind of what they do with people with special needs and things is find ways to help them with their behavioral issues maybe that they're having, and make sure that they can do the things they need to do in their lives. So it was pretty funny that we were using the carrot method on how to make bookkeeping more accessible and do it more consistently. So but it all works. Our brains are very seeking of that, and it works to make it as pleasurable an experience as possible, and reward yourself for that hard work or doing the tough task of your bookkeeping, something you actually look forward to, dare I say. All right. Just quickly, a few tax planning strategies, just because we're leading up into that season. Um, Check out our article on RSPs versus TFSAs and our video. It's super good to know for anybody. I don't care if you're just T1 sole proprietor. This stuff is super important to know about. And RSPs, definitely one of the most, it's maybe we have a little bit of a bias because everybody wants the next level, next level, next level. But don't skip over RSPs. It's a super handy tax planning tool, 100% legal, not going anywhere. Nothing finicky needs to be done about it. You get your contribution limit. If you can max that out, you're ahead of 95% of Canadians probably on their tax planning. So don't just overshoot that with other more fancy tax planning strategies. Really use that. And I say once you've topped that out, or you have funds you're not sure you want to put it into an RSP, put them in a TFSA. And it's not tax free when you put it in, but anything growing in there is tax free. There's no reporting on it other than your contribution limit, and it's significant, and it's getting bigger every year. So something to watch for, and make sure you're using the commonly missed tax deductions. I think like things that are more complicated to deduct and pay attention to are like home office expense. And we break down in, I think, one of our videos on commonly missed tax deductions, how to claim your home office expenses. There's vehicle, because these are a little more complicated. They're kind of part of your personal, and you have to extract them out and figure out the formula. People do sometimes miss out on those. The other is staff parties. I think that's a big one too. We always take a look. It's one of our checklist items when we're doing a corporate tax return, is that you're allowed 6 events per year that are 100% deductible, if everyone on your team is invited. So everyone just has to be invited. They don't have to show up, but everyone's invited. It's a staff party, and 6 of those a year are 100% deductible, in opposed to 50% deductible for other meals and entertainment expenses. So something to really watch for. And if it's the difference between you taking the team out or not, just go for it and treat your team to a night out. But those would be 100% deductible. Those are the ones that pop out in my head. Maybe other ones here. Paul can post here too if he thinks of another one. But those are kind of the bigger ones that people miss out on. And then incorporating your business. So we have a whole video on this. I don't want to go into too much detail, but like the Coles notes of like when you're ready to incorporate your as a tax planning strategy is number one. If you can grow your business that somebody else would buy, that's the probably number one reason to incorporate your business on from a tax perspective, because of the lifetime capital gains exemption. It's $1 million of tax-free money and such a motivator to grow a business that you can sell. Um, the others are if you have filled up your RSPs and TFSAs and you're trying to find another place to stash your cash without paying your full personal tax rate every year, then a corporation is a good place to start investing in or reinvest in your business. Is sometimes a overlooked tax planning strategy. Um, but that's some major tax reasons to incorporate your business. All right. Now, quickly here, um, what to do if the CRA knocks on your door. So, kind of the main ones that we see, very rarely do we see a full scale audit. And usually, what CRA is, they do these programs where they'll test different industries, different types of businesses. They'll do um, expense categories, so like travel expenses, they may look at that kind of thing. So it's not usually zero to full scale audit. They usually do these little testers. And if you can pass the tester, you're in a good spot. So you'll get something. We're reviewing this account. Send us your receipts and some other documentation for this particular expense account. Let's just use travel expenses. This is a common one. So code number this, travel expenses. Please send us the detail and 10 your largest invoices that make up the balance that you claimed in total. And you send all that information in. There's an online thing to do within CRA Online. You can upload all the documentation. Um, and if you're able to do that by the deadline, no issues, they generally just go away. They say, thank you, verified, no changes necessary. You get an all clear letter. If you get that letter and you're asking either for, well, number one thing you do is just ignore it. That's going to be an issue. Number two is if you miss the deadline and are trying desperately to find all those receipts, um, then uh, then that's kind of a separate issue where, you know, they may start questioning how good your record keeping is. You're asking for extensions, and then I guess the worst part of it would be like if you just can't supply those receipts, and that's where they may expand that to a full scale audit. You're like, okay, well, we didn't get what we wanted from that one account. I wonder what the whole thing looks like. And so that's why the record keeping and things is so important, keeping track of those transactions. And what they want to see is an audit trail. And you've probably heard that term before, but what it really means is you've claimed $50,406.84 in your travel expenses this year. What are all the numbers that add up to that 50,400 and blah, blah, blah? Okay, within that, do you have receipts for this one, this one, this one, this one? And if you're able to supply that, and that's the audit trail, you're able to tie all those things up to the claim that you actually made, you're good. If it breaks down somewhere where it doesn't add up, and you can't supply receipts, then that's where they're going to say, okay, well, we took a little sample of your receipts and you couldn't supply them. That's where it's going to be an issue. But the key is not to panic and you do all that work. Like you thank yourself later if you keep your good record keeping. Um, if if you do get that letter and you have an accountant, often we'll just deal with that. So our clients don't do much when it comes to that, especially if we do the bookkeeping and everything. They're pretty hands off. They say, I got this letter. And we say, we got it too, because we were on their CRA mail and we supply the information and we're good to go. But if you do get that and your accountant doesn't get your CRA mail, good to let them know that's the case. And if you don't have an accountant and you do this stuff yourself, don't panic. It's generally pretty easy to navigate where they give you a case number. There's step-by-step ways to provide them with the information they're looking for. And so just follow those instructions and give the person a call. There are people at the other end of those lines in CRA, and most of them are pretty reasonable. And you're gonna, they're gonna help you because they want this file off their desk too. They want this to be an easy one. They don't want to have to go travel out to your location in the whole bit and do a full scale audit. So um, super important there. Paul had an earlier question, which I think was pretty fun and good. What if you get, Paul says, what if you get a grumpy auditor? How can you turn them into a happy auditor that is easy to deal with? And that's it. I think being kind in the first place, like they're just doing their job. I know CRA reps get a bad rap because they can be so by the book and everything, but they have to be. That's kind of what you're looking for in a tax compliance person. So be polite, be kind, treat them like a person is probably the number one thing. And then supply them with the information that you have and be honest if you don't have that information yet or you're looking for it. The key is to communicate. And I could say this to, you know, anybody in life. The key is to communicate first. So don't just ignore because that's going to rev the whole situation up. Communicate, be as honest as within reason. You don't want to, reveal information that would open up more of an audit or something. But if they're asking for something you don't have it, and say, I've lost that receipt. Like, what's next? What do we do here? Or I don't have that receipt on me, but I'm following up with the vendor right now to get a copy of it. That's a perfectly reasonable thing to say, and you're telling them why and that what you're doing to rectify the issue and all of that. So I think that's going to make a happy auditor. Hopefully that answered your question, Paul. All right. If there's any questions there I see the questions too. I am going to get to them. I see them all coming up. So, um, oh, what did I do? So that's the end of this presentation. And of course, join our YouTube channel. That would be great. I've got, again, I'll put this QR code. I think it's this one. And we have a member here. But I'll get to questions now. So I'll try to go to them in order here where it makes sense. All right. I will get rid of that QR code because that's super annoying. So thank you if you've joined. Appreciate the support. And we'll do this Q&A. All right. So first question, other than Paul. So Daniel says, our accountant said to put all our expenses on our business cards and she would choose what gets put through the business. Is it bad that our accountant is okay with this? We work in film and television. I think in film and television, it might be a little bit different. I know there's specialists in these areas that help because a lot of film and television people work abroad and work in different jurisdictions. But I I wouldn't do that for my clients, and the reason being, I don't want to be the one that's claimed this as a business expense versus a personal expense because I don't know the nature of that. Kind of give the business owner generally the idea of what's business related and what's not, and let them decide. But for example, Daniel, if there was ones with well, grocery stores sometimes, and grocery stores now aren't just grocery stores; they're all kinds of stores. Think of like London Drugs here in BC, and there's so many things that could be purchased at some of these places. It's not really in my purview to judge whether that's a business expense or personal, but they may have a different method for that. And definitely, I'm not questioning your accountant whatsoever. If they have a way of doing that that makes sure that there's no personal transactions being claimed, then all the power to them. I've always thought of it as the reverse. Like, if anything, people try to expense more than they should, not the other way around. So, well, that's not true of everybody. I think there are people that are a little too cautious, but it's usually just a question to us. Is this deductible or not? And it doesn't prevent us from taking a personal transaction once a while and converting that into a business transaction with a shareholder loan, and spending just like kind of like a expense report. But I definitely haven't seen it done the way your accountant's doing it, and I I would worry that we would accidentally claim something that was personal, and it would be on us. As like I'm thinking of risk management. I don't I don't want that risk if I was your accountant. Hopefully that answers your question. Heather, GST payment date for annual filing if you're a corp. Yeah, that's March 31st. It should be due 3 months after your year end. And I'm happy to be corrected on that, but I'm 99% sure that that's the date. And I may just Google that. If Paul's still listening, he can verify that for me. Thanks. Amanda Leah says, is it true if you don't have the receipt but have it on your credit card statement, CRA is usually okay with that expense? Amanda, I wouldn't rely on it. It's possible that they let it slide, occasionally, and it depends probably on the transaction volume. CRA is going to have their own evaluation criteria on whether credit card statement like line item is enough. Definitely not for GST. So you need to be careful of GST, HST if you're claiming on that side an input tax credit. So getting money back on the GST you paid, you do need a receipt for that. Um, and I imagine with other ones too. And I wouldn't ever rely that CRA would be okay with that. Best to keep all your receipts. Having said that, we know they get missed sometimes and get lost, and we don't think it's the end of the world. And a reasonable CRA auditor, if there's 1 out of 10 that doesn't have the receipt, but you have a credit card statement line item, that's probably okay. But I definitely would not rely on it and just say, I don't need receipts because I have my credit card statement. I wouldn't rely on it. B&D contracting and drywall. Can you touch base on the UHT filing? Thank you. Yeah, so UHT, I have to get. We did an updated video on that recently. Um, there's lots of things changing with it, and I know they delayed the filing due date right now. But my suggestion, because it's such a complex one, I would watch the whole video on that one. And we did. It's in the description, so Paul just threw it in the description. B and D, I would just take a look at that video first. That's where we're at with it latest on the UHT. Right. Any other questions from everybody? I hope this has been helpful. Let me know, and also make a comment too, if you can, on any future lives that you'd like me to cover. Um, I have all kinds of ideas, but I don't know if they ever work. I think like almost having a business breakdown would be kind of fun. What hair products? Oh yeah, hair products I use lately. I just run my hands through it in the morning. That's all I do. But yeah, something like um, a business breakdown, or maybe what some other businesses are doing, some real life businesses of client, like, or some of our clients or other people that we run across, might be helpful for people. I don't know. And we do have a schedule right now. I'm trying to remember what our next one is. Here, I'm going to stop my share and I'm going to let you know what our next one is, because it'd be good for everyone to know that. I think it's on our Instagram. I'm gonna check our Instagram. This is what I've been reduced to now for figuring out what's going on at the company. February 2nd. um, it's for tax and bookkeeping for freelancers. So if you're any sole proprietor, unincorporated business, we're going to cover you on February 2nd. And really looking forward to that one because it's like we've been getting the same questions for years, and we have, I think, really good answers for them. And they just keep coming up because freelancers, sole proprietors have some of the same issues every single year. And hopefully we can demystify those for you and empower you to actually file your own tax return. I know it sounds crazy, but really important for us to empower people on that. And that's going to be a fun session. Hopefully you can make it for that if you're an unincorporated business. And then we have one on February 6th. No, February 23rd after that. So that's the skip a week one. And we're going to talk about launching a business successfully in Canada. And I think anyone can glean some great information from that, because there may be steps that you missed, or there may be things you didn't understand when you started your business that you can start incorporating into your business now. So really excited about that one as well. Hopefully you can make it for that. We had one other question here. B&D contracting, uh, we bought the vehicle for the corporation privately and get charged RST. Can we claim input tax credit on HST? So if you bought a vehicle for the business, it is an ITC if you got charged GST, not RST though. So if you're in Manitoba, there's no refund for that, I don't think, unless I'm not 100% on provincial sales tax in Manitoba. So sometimes you can claim these back if they're business related. But that would be a specific RST question that I can't answer for you on this one, unfortunately, B&D, sorry. But definitely GST you can claim back, or HST. And Heather has another question. Can a sole prop claim full cost of an office chair if it's in their office used for work? Office space claimed as a percentage of the house. I would say 100%. And I'll die on that hill. If you're furnishing your home office for your business, furniture is deductible, but it has to be claimed over time. So any office furniture needs to be added as an asset on the T2125. I think it's right in there. I'm trying to remember if it creates a different form, but you can add in any capital expenditures, and an office chair would qualify as that, and it's expensed over a number of years. So you can add those to asset. It's like asset ones, and office furniture would be, because you're buying it specifically for the business. Especially if you just work from home. Yeah. Hopefully that helps, Heather. Wait for a second here. Well, thank you everybody for joining this live, and hopefully you got some good information out of it. Watch for those next ones, and I'm going to make sure I don't miss saying anything here. Key takeaways is record keeping. Absolutely keep your records up to date. Know your obligations, so track those into your calendar. Super helpful to do that. And respond promptly to CRA. Communicate with your CRA auditor or reviewer. Super important to keep the lines of communication open. Tell them when you're going to supply things and try to stick to those timelines. And next, just check out the links in the description. And if you want to support the channel, I know people want to find ways. There's super thanks is one way. You can just give us a one-time payment if you want to support the channel that way, or if you wanted to join the channel, we've got some custom emojis. I didn't see, Heather, have you tried any of those out? There's I threw in a couple custom emojis for our members only to use. It would be awesome if somebody used one of those. And so far there's Picard level membership, which is level 1, ironically. Yeah, we'll have to find something better than Jean-Luc Picard, which might be difficult. And then other things, freelancer course that we have if you want to file your own T1, posted that below. And always reach out with your questions on our YouTube channel, and we do our best to respond to as many as we can, and definitely prioritize membership questions. We know who you are because there's only 2 of you, and still it's open. The number 10, our number 10 member, gets this beautiful mug. Have it here. It's super cool. It's the whole thing. It even fits in the whatever. We'll find you and we'll send it to you. Awesome. Well, thanks everybody for joining. Really appreciate this. Throw a like on here if you can. Subscribe to the channel. Join the channel. Send us a super thanks. Keep us going and keep us motivated. Super helpful. But thank you all so much for joining, and we'll see you in a couple weeks.